Hey everyone, this morning I'm going to be talking about 8 critical tax decisions for divorcing couples. Now, nobody wants to get divorced, that's at least not the plan when you get married, but it happens. And so, what are some of the most significant impacts to your tax and financial situation that you need to be aware of as you're heading into divorce? Now, the first one is making sure that your CPA knows about this, at least from a tax perspective, right? Filing for divorce and actually being divorced will change your filing status. So whatever your marital status is on December 31st is how you will file your tax returns. So if you're married on December 31st, you're married. If you are not married, then you file separately. Now, you do still have the choice, even if you're married, to file what's called your taxes as married filing separate. Often that will give you more cost, right? The tax code is not really built for, they call it the marriage penalty, okay? So if you're married, if you do married filing separate, those are more expensive, generally, not in all cases, but 95% of the time, than if you were actually two single individuals. Now, we do have to look at alimony payments, if there's alimony going back and forth. After December 31st of 2018, alimony payments are no longer deductible to the payer, and they are not income to the receiver, okay? And that's under the TCJA, Tax Cuts and Jobs Act. That change does not apply to divorces that were finalized before 2019. Those divorces were grandfathered into the old rules where alimony payments are deductible and the receipt is income. Now, of course, child support payments, these are not deductible, never have been. Child support payments are not deductible. They're not taxable as income. It is consistent with the old rules, so no major changes there. But division of assets. Understanding the tax implications of dividing the assets is actually really important. Transfers of property between spouses as part of a divorce are generally not taxable events, okay? However, the future sale of assets like real estate or stocks could have capital gain implications based on the original acquisition cost, all right? So definitely want to be getting your CPA in on those calculations. We actually have people call us before they consider even mentioning about filing for divorce because, of course, they want to make sure, well, what kind of tax implications is that going to have on their account? Now, dependency exemptions were suspended under the TCJA, Tax Cuts and Jobs Act. They were personal and dependency exemptions were suspended from 2018 until 2025, but determining which parent claims the child as a dependent could still affect eligibility for other tax benefits like child tax credits, child care credits, if you have a business, writing your kid off, or wages, these kinds of things, okay? The next one, of course, retirement account and pensions. Dividing retirement accounts and pensions can have significant implications. Direct transfers of retirement funds according to a divorce is under something called a quadro, QDRO. These are not taxable, but if there's future withdrawals, those would be taxable. So if you're going to split those up, make sure you're doing it as a part of the divorce proceedings. The quadro, that specific document, it's a specific document, it's typically drawn up by the attorneys. Now, you may also have healthcare considerations, okay? So who is going to be paying for the healthcare plans? Is the spouse covered? You may need to look for alternate coverage, okay? So you may have to go to the health insurance marketplace or under COBRA. And of course, there could be costs associated with changing plans, switching in the middle of the year. Now, most of the time, especially if this is health insurance through an employer or something like that, there are exemptions from not being able to switch or costs for doing switching because of a divorce, right? This comes up pretty frequently. Now, the very last thing, of course, to consider, legal and professional fees, okay? While legal fees related to a divorce, including attorney's fees, are not tax deductible, certain costs associated with tax advice during a divorce may be deductible, okay? So costs for obtaining taxable alimony can be deductible. And really the question here is any cost related to something that's going to be taxable is deductible. So if it's taxable, it's deductible. If it's not, it's not. Okay, so really something to check. So one of the biggest things, piece of advice is, really here, given the complexity and the potential financial impact of these changes, consulting with proper tax advisors, tax strategists, and financial advisors as a team, right, can really provide very valuable guidance and save you a ton of money. Very, very last thing I want to say, please, 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 okay? You and your soon-to-be ex-spouse should have separate teams, separate tax advisors, separate financial advisors, separate attorneys. Do not, this is my recommendation, do not use the same CPA, the same financial advisor, the same attorney. Even though those three categories are supposed to be fiduciary, there really is no way for one person to be a fiduciary to both sides, if that makes any sense. So if you are going through a divorce and any of these concerns are something you're worried about, you're looking for some guidance, looking for some help, we would love to help you. Tax Goddess, that is what we do. Tax strategy in all cases, divorce, new business, buying real estate, selling real estate, whatever it is. So if you have questions, reach out to the team and taxgoddess.com. Happy to help you and go through what your options are, what this is going to look like, and how we can hopefully save you some money. So thanks so much, everyone. Have a wonderful day. We'll talk to you soon. Bye.